Good morning and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. We're coming at you today just after 10 o'clock a.m. Central Time. 10:05 is what my computer is showing here at the moment. And that's because I have to leave to jump on a plane in a little less than an hour. So I thought I'd get a video out just to keep everybody up to date on what is happening. All right, we're going to start with oilseeds today, just because we are seeing some heavy losses in the oilseed complex today. November canola is down $15.40, or just over 2% in trade this morning. That is kind of a knockoff effect on some of these other vegetable oil markets. We have soybean oil down 1.6%. To 52.48 on the August. If we look at the December, that's down about 1.7 or 1.8% at 52.80. We have rapeseed down quite considerably today. August, which still carries the bulk of the open interest and volume, is down 2.8% or 13.75 euro at 4.85 and a quarter. We did have palm oil down earlier in the session, but it has brought back some of its losses. I think one of the big drivers here is crude oil, as we have that continuing to fade as the tensions in the Middle East kind of ebb and flow as far as the value goes. There's definitely value coming out of West Texas now, which is counterintuitive given the general rise in conflict in an area kind of leads to higher prices. But I think a lot of the trade is just looking at risk off trade right now. All right, let's get into some of the charts here on the oil seeds. I'm going to pull up the NAV canola chart here. You can see that it has traded down now below. I'll blow this up a little bit. Down now below the 20-day moving average a little bit. It has recovered since then as well, but still a relatively weak day. We've seen now 3 red candles in a row after posting a new high on Friday. So that's a bit of a concern. One thing that I do want to kind of mention here is I'm going to look at one part of the disaggregated commitment of traders, and that is the net long position. As of Tuesday of last week, canola hit 135,940 contracts long. That is a record long position for this commodity since they start tracking it, which hasn't been that long, actually. Just it may be actually 4 or 5 years. I can't remember now. But it hasn't been as long as some of the other commodities. It was when the canola went to the NYMEX instead of the Winnipeg Commodity Exchange. So that's one of the reasons why we're seeing such a steep sell-off in canola as well, is because of the large long position. So there might be some profit taking. There might be some risk off happening there. All right. I think that's enough for canola overall. Let's get into the wheat now. Now, wheat did see some crop condition rating losses over the last day or two, and but we are continuing to see losses as we move through harvest, particularly in the winter wheat category. Let's look at the September Chicago here, as that's one of the most affected. As you can see, most of the gains that we've seen over the last week or so have been eroded now. This market is now breaking down below the 20-day moving average. It did test, as you can kind of see, maybe this trend line isn't necessarily accurate. It was when I created it, but it's kind of breaking down below the 20-day and the 50-day, and it could come back and test this support area here at 540. We're only about 16 or so cents away from that now. So that is the September Chicago. Let's look at the September Kansas as well, as we see very similar pattern here emerging. A break again of the 20 and the 50-day today. It is kind of looking like there's some support happening there, just like there is in the Chicago. But overall, most of the gains over the last couple of days or last week to 10 days have been eroded quite significantly. Now, spring wheat is holding up relatively well. We've been talking about this for a while. Only 10 million or so acres were planted of spring wheat in the U.S. That's not a lot, so that means that there's not a large crop being expected here. As you can see, this trend line is still holding. The 20-day is about to move above the 200-day. Overall, that still, is a bullish looking chart on its own. But of course, this is one of those uh, rising tide raises all boats and a falling tide sinks all boats kind of thing. So I think we are seeing some weakness in Minneapolis. And if we continue to see weakness in Chicago and Kansas, it could continue to affect Minneapolis. Although I do expect Minneapolis to move lower at a slower pace if that trend is going to continue. All right, let's look at some U.S. row crops, which actually aren't faring too badly today, given the action over the last couple of days. As you can see, corn hemorrhaged a lot of value yesterday, breaking to a new contract low, traded as low as about 416 yesterday. We did see a new low as well today, down to 414, but some of those losses have been made back as well. Sorry, I forgot to blow this chart up. Let's do that now. So here's that previous low. Let's see, what was that low exactly? 416 and 3/4 on the corn, and then today it did punch down to 415 even. So we are looking at a corn market that is continuing to make new lows, which never is a positive sign necessarily. Soybeans. Let's look at August soybeans now. Again, lost a lot of value here as soybean oil was one of the things pushing this market higher. And now we've seen a couple of days of losses. As you can see, there's some consolidation here on the moving averages, which does signal that there is a little bit of a neutral bias to soybeans, which I did bring up in some of our other videos or reports. I can't remember where exactly. So that's where the trend line is now. Also, if we wanted to kind of look at where, we kind of saw a double top in here as well near the 1080 mark. So we're kind of trading in this, kind of pennant type formation, but it looks quite neutral as well today. All right, that is about where the markets are at this time. It's now 10:12 Central Time on the 24th of July. Thank you for joining us. We hope that you continue to tune in, and we'll see you again. We'll probably see you again on Friday. Have a great day.